What's up, everyone? Dylan O'Neill here. I wanted to hop on and do a trade recap video going over the trade that I took this past Friday, August 26th. So as you can see on this naked S&P 500 futures chart, the candle from Friday was a massive range. So in fact, from the high to the low, the range was 174.5 points. That is significant. And if you compare this particular candle to other daily candles that you see on this screen, you can see that Friday's move was very, very large. So luckily, I was able to short the S&P 500 from 4,200 all the way down to 4,080 for a massive short position. Okay, I'm going to go over that particular play in this video, why I traded it, why, what my analysis was, and how I made a play around my analysis, right? How I planned out the trade before it triggered. So, as you can see in the Discord, in the InvestiTrade Discord, this was posted on Monday, August 22nd. Obviously, I made the wrong date for whatever reason. I thought it was the 19th, but I was 3 days off. So on Monday, August 22nd, I said that if we get a bounce at 41.30 to 41.20 and price pushes back to retest the 4,200 area and fails, that could be a nice trigger to go short for a move to 4,080 macro support. So that was on Monday. Then you go to Tuesday, right, the 23rd, and I said, let's see. Ideally, I'd like to see a bounce from this 41.30 to 41.20 area up to the 4,200 region. If the S&P retests the 4,200 region and fails, that could be a good short opportunity targeting the 4,080 macro support. That was 2 days in a row, both Monday and Tuesday. If that wasn't enough, on Wednesday, August 24th, I said yet again, ideally, I want to see a rally towards 4,200 followed by a reversal. So for 3 days, Monday, Tuesday, and Wednesday, I highlighted my plan. Okay, that is where my head was at. I wanted to see price bounce near the 41.30 to 41.20 area and then gravitate towards the 4,200 region, get short, and target 4,080. So let's go to a 1 hour chart. I'm going to go here. Okay, so August 22nd was Monday. Okay, that's when I first gave this particular plan. Okay, and as you can see, I said I wanted to see price come down to this 41.30 to 41.20 area. As you can see, I put this gray rectangle in that area. Okay, so on Monday we got a nice push lower. Okay, this is exactly what I wanted to see. Then on Tuesday, August 23rd, and Wednesday, August 24th, price found bids in that area. That's exactly where I wanted to see price bounce and then, make its way up towards the 4,200 region. Okay, so this plan was working out flawlessly. And I wasn't necessarily interested in taking this long position up. I more so wanted to see a retest of the 4,200 area and then get short. So as a trader, you cannot expect to catch every single move. It is impossible and it's way too overwhelming. Stick to the highest quality setups and you'll see much better results. So like I said, I did not want to catch this particular long setup up to that 4,200 area. I was just waiting for price to get to 4,200 and then I was interested in shorting as per my pre-market plans. So Thursday comes around, Price misses 4,200. It got pretty close, and then it pulled back. So then Friday, okay, this is the day that it all went down, okay? So let's go like this. Okay. So Friday had two important data coming out. So Friday had the PCE number at 8:30 a.m. Eastern time, and then at 10 a.m., right, 90 minutes after PCE dropped, Powell was speaking at the Jackson Hole Economic Symposium. Okay, so had two catalysts on this particular day. So PCE came out slightly bullish, and as a result, price moved higher into my 4,200 region. Okay, so this is where I wanted to get short. Okay, and I'm just gonna fast forward, and you could see exactly what happened. So not only did I call this move on Monday down to this 4130 to 4120 area where I expected a bounce, then it went up to my 4200 area where I got short, and price absolutely collapsed. So in regards to macroeconomics and say fundamental reasoning, a lot of members were asking why this particular drop happened. I believe that it was a textbook bull trap, right? PCE number came out slightly bullish. Price rallied into a macro area where sellers were able to reload, right? A lot of bulls got long into 4,200, and sellers were able to use that liquidity to get short, and this was the outcome. So when Powell, took over the podium and started his speech at 10 a.m., he's been reading the same exact script for the last few months. So he didn't really say anything too surprising and too hawkish. If anything, the ECB, which is the European Central Bank, they came out with comments prior to Powell speaking, and they had some hawkish remarks that they were going to raise 75 basis points at their next September meeting. So if anything, fundamentally wise, that could have triggered some of the weakness, but I genuinely believe that this move was mainly technical, okay? So as you could see, from Monday to Friday, it's exactly what I thought was going to happen, and it worked out flawlessly. Okay, so why was I looking at 4,200? Okay, so 4,200 is a big macro area. Okay, not only is it a support and resistance level, but it's also a psychological whole number. Retail trader, or not even just retail, but traders in general, market participants tend to gravitate towards whole numbers, because of psychological reasons, right? So 100, 200, 300, 400, 1,000, 1,100, those whole numbers tend to act as key pivotal areas because many market participants use them in order to trade around, okay? So that was the first thing. Also, you could see in the past, price has pivoted around 4,200, and this was very significant here. 4,200, right where my cursor is, right here, the high of this particular day on May 31st was 4,202. So it hit 4,200 before, turning around, rolling over, and sending the S&P 500 to new lows, right? Those were the lows of the year, right? 2022 lows happened after price hit that 4,200 area and then rolled over. So this 4,200 region has historically been known to be a very pivotal area. Okay, so that is why I used that 4,200 area to pick a spot to short. Okay, same thing goes to 4,080. The reason I picked that is because it has acted as a nice support area this particular year. So right where my cursor is, you could see in this area, it was a key support back in June, and then price even bounced at it back in, early August. So 4,080 was a key support area that I expected price to gravitate towards if it did happen to roll over from 4,200. And as you could see, this particular plan was nearly flawless. So let's go to my exact entries and exits, right? This is where I'm going to go over my exact plan. So this plan was created on Sunday, okay? It did not trigger until Friday. So for Sunday, Monday, Tuesday, Wednesday, Thursday, I was just sitting on the sidelines waiting patiently. Until price gets to my entry, I do not lift a finger, okay? So I see so many retail traders taking nonsense trades all throughout the week. They'll trade 3, 4, 5 times a day looking at mediocre setups because they want that action. They don't have the discipline to sit on their hands and stay patient. Okay, they want that constant action, and it costs them a lot of money because they aren't taking quality setups. So I had this planned out on Sunday. Okay, I knew exactly where I was going to get in and get out on Sunday. Okay, so we'll go on a 5-minute chart. So let's see. Okay, so I highlighted all of the areas for this particular trade. So how I structured this this plan is I had 5 different limit orders from 42.05 up to 42.25. Okay, each limit order was a sell order to sell 7 lots of the S&P 500 futures. Okay, the E-mini futures. I wasn't using options. I wasn't using equity. I was using the futures. Okay, so from 42.05, every 5-point increment, I had another 7-lot short order. Just limit orders. So all I had to do was wait for price to hit those limit orders, and I was going to get into the position. Okay, they weren't market orders. I wasn't putting them, actively as the market was going up. They were passive orders just sitting there. Okay, so I had 7 at 42.05, another 7 at 42.10, and so on up to 42.25. As you can see, only 3 out of 5 limit orders got filled. So my max position was going to be 35 lots, but I only ended up playing 21 because only 3 out of 5 limit orders got hit. Okay, my stop loss was 42.35, and my targets were 41.52, 41.14.75, and 4,081. Okay, why were those my targets? As you can see here in the Discord, right, we go to cheat sheets and we have my key level document. Okay, so on ES, you can see that I have not touched this particular document since June 2nd. So these levels have been on this sheet for, this whole week, the last couple months. Okay, so as I said, my targets were 41.52, 41.14.75. Look at this. Both are on here. Okay, that's why I targeted them. They are key levels. In other words, they are support and resistance levels. Okay, so I was just using my key levels as targets, and then I also used the 4,081 level because I showed you guys the importance of the 4,080 level. As you can see again, daily chart, like I said, this level acted as key support back in early June and early August of this year. Okay, so those are the reasonings as to why I use those particular targets. Why I use these entries is because they were inside of my 4200 region. Okay, so because my region, right, my area that I wanted to enter was from 4200 up to my stop loss of 4235, that's pretty wide. So rather than entering full size at one particular level, let's just say 4205, I like to base it out and scale into all of my plays. Okay, let's just say I entered all 35 lots at the 4205 level. If I got in to the full size position right off the bat, that widens my risk. Okay, so now I would be risking 30 points instead of averaging into the trade. Okay, that's much riskier. So that's why I like to scale in as price gravitates towards my entry area. I get to average up, for a short position, I get to average up my average price to my own benefit. So basically, I don't need to have a flawless first entry. My timing doesn't have to be flawless. I'm giving myself some cushion for price to kind of have some breathing room, and if it wants to continue to go further into my entry area, so be it. I'm all for it. The reason I chose 4235 as a stop loss is because it was right above a gap fill. Okay, so let's see. The gap fill was, we'll go to an hour chart. So the gap fill was right here. Okay, as you can see, this area right here was a gap that occurred over the weekend from August 19th to the 21st. So price gap down over the weekend, and usually price gaps tend to act as a support and resistance. So I was using that to my advantage, right? And that price gap went up to around 42.32-ish. So I put my stop loss right above at 42.35, and like I said, I was using that context in my favor. Okay, so I figured that if price were to break above 42.35, which was above the price gap, that would invalidate my short thesis, and I would take the loss. Okay, so like I said, I made this plan back on Sunday. I didn't make it on Monday. I didn't make it Tuesday, Wednesday, Thursday. I didn't make it the day of. This plan was fully prepared for on Sunday. So I had more than enough time to prepare and get ready for action, okay? And like I said, all I did was sit patiently and wait for price to gravitate towards my short entry, okay? A lot of you guys ask what I look for in regards to confirmations while the market is moving or has hit my entry. Okay, so a lot of retail traders will come up with an entry, but they won't enter immediately. What they do is they wait for some type of magic confirmation or signal, and then they enter. I personally do not believe in that, okay? By the time you wait for volume to come in or some type of candle structure to form, the move already happened. So what I believe is the most effective method is to just put your limit orders at the entry. I don't care what's happening when price hits my entry, I get in, okay? Because like I said, by the time you wait for any sort of confirmation, the move already began, and it skews your risk to reward, okay? So before the move even triggers, I have my limit orders sitting there waiting. Okay, I don't care what's happening. I don't care what Apple or Microsoft are doing. I don't care if ES is ripping. I don't care if NQ is weak. I do not care. I just plan out my price levels of where I want to enter and put the limit orders there. And when it hits, it hits. Okay? So let's just say, people say, oh, well, how do you know it's going to work out? I don't. Listen, if I knew that this trade was going to work, I would have rang Jeff Bezos's doorbell and said, hey, Jeff, I have a trading plan that has 100% chance of working out. Can I have a loan for $1 billion at 100% interest rate? I will give it back to you. Okay? Obviously, I have no idea if this trade is going to work out. But what I do have is a fully structured plan with a stop loss in place. Okay, so I have insurance in case this trade did not work. Okay, so once you enter the trade, if it works out in your favor, you follow the plan. If it does not work out in your favor, you follow the plan. You see how that works? I don't know if this trade is going to work. I could have lost money. I don't know. But all I do is follow the plan. And let's say the trade did not work. I have a stop loss there, okay? So if the trade did not work and it hit 42.35, I had a buy stop order sitting there. The moment it hit 42.35, if price got up there, it would have stopped me out and covered the position for me. Obviously, this trade worked out flawlessly, so that didn't have to be the case, but you cannot be scared to lose, okay? I would have been perfectly fine with losing this trade because I was confident in it, okay? 10 times out of 10, I would rather lose on a trade as opposed to miss out on a trade that I plan for, okay? If I lose, that's okay. It's part of the game. I lose often. Trust me, I lose often. Okay? So the good thing about my strategy is the fact that it has a wide risk to reward. So I allow my winners to run. This particular trade had a 3-to-1 risk reward, meaning that if I took 10 trades with that risk to reward ratio, I would only have to make money on 4 out of 10 trades to make money, okay? So think about that. If I took 10 trades with this same ratio, risk to reward ratio, I would only have to win 4 out of 10 trades to come out green after the 10, okay? That sounds great, doesn't it? And that is why this particular system works so well, because it doesn't require a high win rate. Okay, having a high win rate is very, very tough in trading. Okay, especially if you trade, short-term scalps. A lot of retail traders like to scalp, and it is not sustainable. If you can do it, bravo, I applaud you. Congratulations. I know that it's not sustainable because I used to do it. I scalped for over 2 years, and I realized once I looked at my statistics, I was like, wow, this really isn't effective. And it required a high win rate, okay? So many retail traders scalp because they want that immediate gratification. I get members all the time telling me that scalping is the easier option. Of course it is. So is watching Netflix and sitting on your ass compared to working, right? They want the easy way out, and that's what scalping is. So do I like scalping? No. I avoid it at all costs. If you find yourself scalping and you're profitable, like I said, I applaud you. Congratulations. But for the struggling trader that is watching this video who scalps, just know that the odds are not in your favor, okay? Because, like I said, having the scalping mentality you want that immediate gratification, and you take profits on winners very quickly. So you're not allowing those winners to run. Okay. And while you're not letting those winners run, it requires a very high win rate, say 8 out of 10 trades, right? So your win rate technically has to be 80% just for you to make money after 10 trades. Whereas me, I only have to make money 40% of the times and I'll come out, in the green. So, like I said, that's just where I stand. And you could see on this particular trade, my stop loss was 30 points from my first entry, right? So 42.05 was my first entry. Stop loss was 42.35. That's risking 30 points, okay? And then if you take the the average of these three targets, right? You add the three targets together and then divide by 3, take the average, you'll see that they're over 90 points reward, okay? So I'm risking 30 to make 90. That's 3 to 1, right? My reward is 3 compared to my risk is 1. So that is what I look for. I look for at least 2.5, which is what I put in the pre-market plan on Friday. So you can see, here, I prefer at least 2.5 to 1. So as I said, in this particular trade, it was 3 to 1, even better. So the more the merrier. Sometimes my trades, my last YouTube video, that particular trade was actually 4 to 1, which is that's really, really good. So anything of 2.5 to 1 and over is great. For you scalpers, a lot of you look for 1 to 1, 1.5 to 1. Like I said, it's just very, very, very tough to succeed with that mindset. That's all I'm saying. So, one last thing that I have written down that I did not talk about yet. So not only did ES come into this 4,200 region, right? It hit this area at 9 a.m. on August 26th, right? So at 9 and 9:05, it made the push higher. I also had a resistance on NQ that tested basically to the perfect point at 9:05. So not only was ES at macro resistance, NQ, right, NASDAQ futures also had a strong resistance that it hit at the same exact time, right? So if we look at a 90-minute chart, you can see, I'll do 3 hour actually, you could see that this trend line acted as support and resistance since June 27th. So you could see here, every time price hit that trend line, buyers and sellers were active. First, the sellers had control, and every time price would come up to that level, they would reject price and push it lower, right? See 3 times. And then once price got above, it acted as key support. So once price dropped below, right, it finally found its footing, and look where it rejected. Nearly perfectly, and that was the high before NASDAQ came down. It's almost down 800 points from the time that it tested that trend line. So having double confirmation with ES in 4,200 and NASDAQ at this trend line was, a double duo. And this trend line was posted, I believe, 3 or 4 times, at least 3 or 4 times in the Discord. I posted pictures of it going back to, a month or 2 ago. So this was basically flawless, and the timing was perfect too. So that's about it. Hopefully you guys learned a lot from this video. Like I said, it was a flawless trade. I entered in here, stop loss here, targeting there. every Monday for the Discord, I do a weekly analysis video where I share my thoughts, and you guys will see what I have to say and where my thoughts are moving forward. That's about it. Peace out.